Good morning, everyone. It is Wednesday, January 12th, and this is Morning Market Movers, where we do live analysis for day trading and we take a look at hotspots or potential hotspots in the markets for today. I'm Todd Rich with Nadex. With me is Brian Caprice from Keep Trading Simple. We just had the CPI number come out, and we told you yesterday to be ready for this economic number. What are we seeing? Uh, the top line, inflation has risen 7% over 7% over the last year. That is the highest, the biggest spike in the last 40 years for inflation. I mean, that's a number. Takes us back to the early 80s. Now, on that number, silver taking off. We're seeing strength in oil. We're definitely seeing dollar weakness on that. We're seeing dollar weakness across the board. We're going to take a look at all of that. When you combine the strength in oil and dollar weakness, right away you got to say, hey, what's going on in the U.S. dollar CAD? We're going to take a look at that, because not only is the dollar weak, the Canadian dollar is getting strength with oil higher. And then we'll take a peek at what's going on with the equities. They all seem to be fairly receptive to it. I think everyone was expecting a big number. Excuse me. Before Brian and I jump into it, I do need to share this disclaimer that trading involves risk. It may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education. So, before I flip it over to you, Brian, I was just going to take a quick. I mean, we can see. Oh, look, silver is actually starting to retrace a little bit, but you can see how silver is certainly took a little bit of a jump there. In fact, you can see silver. I'm going to do this. Silver has been trying to climb out of the hole it dug out of the beginning of the year, and this is a as the saying goes in this, markets go down on the elevator, but up on the escalator. We're seeing silver trying to climb its way out, and with the number today, we saw an additional step higher. Brian, I'm actually going to flip it over to you, because we do want to go through, not because we'll go from silver, we'll go to oil. We'll take a look at that dollar weakness, and certainly when we're talking about oil, we're going to want to know that later this morning at 10:30 a.m., we've got those oil inventory reports in the U.S. So there's going to be a lot going on. Let's get into it, because we've got a bit to cover.
Yeah, so I would say right now this is kind of what we talked about before about how 2022 is going to be the year of currencies. Just it's been slow for a couple of years. In the last 24 hours, there's some major movement that's been happening. A lot of it is centered around the dollar between what Powell testified and said yesterday and then the CPI today, as well as what other central banks have said in the last 24 hours. So if you listened to Powell and heard the testimony yesterday, it was rather weak. It was kind of like, yeah, we'll raise it if we see it, it's on track. And it was kind of like, what does this mean? Like, this is really, really weak. And the dollar had some crazy moving off of it. Today's CPI, and we mentioned, that this is really kind of where the buck stops. Like, you can say whatever you believe, but the data is the data. Not that this is not in today's day and age that the science matters anymore, but this is, when you're looking at CPI, not only was the forecast higher for CPI, but core. Remember, the evil empire inside of inflation right now is supposed to be gasoline and energy prices, right? Well, core removes food and energy from that equation. That shows that it is not only it's not less than what it was, it's actually increasing and getting worse. And this was something we mentioned yesterday: is more people are going back, and again, we're not locking down. This is kind of the big factor. Again, what did you say, Todd? We're at 40-year highs now.
40-year high. Yeah, that 7% spike.
Yeah.
I think it's last time we saw that was 82.
Yeah, and look to see what housing mortgage rates were back in 1982. So, and it's odd. With Powell mentioning yesterday that we're basically now in a low turn, a low rate environment, permanently. I mean, it's one of those things. It's either we're going to get used to hyperinflation, which again, all the big guys out there said this was going to happen. Here's the reality of it. Now, the dollar is going down, and there's a couple of reasons why it could be doing that. I would say that the largest one out there, and again, Pound, we talked about the pound strength coming in again, but you can say versus the euro, versus the yen, versus the Swiss, versus the CAD. The CAD is really the outlier right now, and there's a couple things. Yesterday, I mentioned that I expected the CAD to be the next central bank really to start moving. With oil going the way that it is, they're not stupid. They know that they make a lot more money with oil. Their economy is going to be able to absorb more of the kind of negative kind of results of raising interest rates. And again, that's why this dollar CAD has really gone crazy. Here's a statement a little while ago that talked about the RBC says the Bank of Canada needs to hike rates rapidly and multiple times. That's the type of bullish response. And again, this is the Royal Bank of Canada CEO. That's kind of a big guy over there, right? When they say those things, that's when you start to see movement. And we knew that it was coming. Another one of the big headlines out there, which also could probably be affecting the dollar a little bit, is this. China locks down its third city, raising affected to 20 million. Now, you may say, what does this have to do with the dollar? Well, they have obviously a different culture than we have. They just locked down another area of 5.5 million people Monday because they had another 2 cases of Omicron. And meanwhile, we're over here with 1.3 million. Residents are not allowed to go out, and stores have been ordered to shut except those selling necessities. So this is kind of that worst case scenario U.S. kind of lockdown, but China's starting to go crazy with it. So the dollar is being affected in a couple different ways. And again, we're seeing this very, very big spike down. I think everybody expected there to be a bit more inflation, but then when they're looking at it, they're saying, well, wait a second. He already, Powell already knew what these numbers were, they were. Why was he that weak, and what does he expect? So again, the fact that, the CPI and the PPI numbers and inflationary numbers can be whatever they want, but if there's going to be no inaction on it, that's where this all comes in. So it's kind of like, wait a second, he saw these figures and said, yeah, it's on track. We're good. And it's like, wait, so you expect it to get worse than this? Because remember, he said it was going to continue to rise till late this year. So that's one of those things. His very dovish comments yesterday, even though these were higher today, his kind of signaling that we're not ready. We haven't made any decisions yet. Trust me, the FOMC, they, Powell knew what these numbers were yesterday.
He did plow the road and say, we're open to it. They're going to do more. He just wasn't jumping up and down about it, which
and the fact that he said,
need to be doing.
But here's the thing, right now with the dollar moving down, there will be a reversal because again, like you said, everybody knows it's going to raise, so there's going to be some good opportunity out there when this does turn. Exactly. I mentioned yesterday gold. You can see gold. I mean, here's the thing: gold spiked a little bit, right? Gold went up into that selling area that we marked off yesterday, right? This area where we had this large push down in price, this basing and huge explosion back on January 5th, the 1822.99 or 1823, you can see we spiked into it and immediately started to pull back again. So it wasn't like we saw, oh my God, great inflation, bam, gold goes crazy, because gold buyers know that, it's higher. We just we don't know when it's going to happen. We know that it's going to increase more. And that's the spike that we saw yesterday going up of him saying, yeah, we don't have a date. We know it's going to continue to go higher. So it was like, there's still more opportunity here. But again, right now they're being a little tepid. It's like, listen, can we break through these sellers? And the answer was no. Silver also blowing up. But again, silver is kind of at a racetrack, not much slowing it down. But what silver is doing is it drove all the way up to 23, psychological number. And then looked across the gold and they say, what's happened? What gold? Wait, we're not doing this? We're not doing this now? Okay. And now you're seeing it pull back again. So I would expect kind of a reaction at the open today, but they'll be interesting ones to watch, particularly because we have oil following right behind it. And again, oil is going higher. That's why I wanted to talk about the dollar CAD with oil kind of spiking, going even higher. And yesterday we talked about if we can get basing and the selling at 81.50, look for this to go up. And it is. Now it's up into the 82.16 range. And with our inventory report, we know right now that it's not expected to be huge. It's only coming in at minus 1.9, and they're saying it's a -1. Remember, last week was way off. Last week, when we looked at the forecast for crude oil, you can see last week it was like, wait a second, and the number came in big, and yet this one came in much, much lower. So, they're calling for a 2.1. At this point, it's kind of like with people going back. I mean, oil technically with China locking down should be a big deal, but the U.S. is going full blown like, it's not going to be a big deal. And I even saw something this morning about Eric Adams, the new mayor of New York City, basically not shaming, but more or less shaming large companies because he said the longer you allow employees to stay home, the more you're hurting the economy because there's people that he said are the lower skilled workers, the vendors, the small stores, and basically called on them that you need to send employees back to work. that you are hurting the kind of underbelly of the common man. And again, new
on
mayor, and
oil,
he's winning a lot of votes. So
on oil, when was the last time oil was up above $82 a barrel?
The last time above 82 would be October 2014. So
Wow.
yeah,
Yeah.
and it's, I mean, we've marked off a couple of these levels. The next big kind of
we're
like
going
little
back.
hiccup.
We're having to go
86.
back. We're having to go back 8 years to get levels.
Yeah.
I mean, these are levels. You're looking at levels you had marked from 2014. I mean, that's where we're
Really,
having to
there's
go
not
to on the chart. Now,
and again, on a weekly basis, we don't have anything really, really strong, a large time frame weekly basis till $91.
yeah. So yeah. Now come all the way back to the current day. Yeah, I was just trying to figure out, what can we be looking at here? That makes a little bit more sense based on, I mean, everything is different now. I mean, the whole economic.
Yeah, I mean, what I would say is, again, we got to get through the opening print. So obviously, with everything going up, the interesting, like I said, I find this fascinating. Again, with core actually continuing to increase because that strips out the inflationary factor of energy prices. Now the question is, I mean, OPEC, we already know they're not going to increase it at all. Again, this is, a lot of times finding this number is literally like a little monkey throwing darts at a board because it tends to be all over the place. But the data is out there. Somebody knows the data. Right now in the European market, when you look at it, the Europeans are coming in right here. They're kind of going up, but it's a little hiccupy. I mean, they hit the sellers and came back and found more buyers back at the basing level and then pushed higher again, and they got turned around again. And they finally had enough energy to break through. So we'll talk about kind of the full session. That's kind of given our full session right there. It's more or less fighting to the upside, but it's not a straight run. Normally, when we see the straight run, we're looking for that reversal back to the downside. They know that the data is supposed to be, I mean, according to the API data, it's supposed to be disappointing today. And again, they're still having that struggle going higher. So I would really like to see what the opening print looks like at 9:30, see what the retail trader is going to do with it. Because again, there is a dollar effect in here as well with oil.
Right.
And then at 10 o'clock, you need to see where this thing starts heading because the people in the know are going to start moving this around. Because like I said, if inflation is going up, even though you strip out energy is kind of like, don't look at me. It's not us anymore.
But it's still, I mean, we're looking at levels we haven't seen in 6 years, 8 years, whatever.
Right.
8 years.
Right. Remember, yeah, and remember, it was the target. Right? Biden said, "Oh yeah, we got to control energy." Well, energy is not the problem now. Now it's everything. So it's hard to. Yeah, it's hard to start pointing fingers, and if it's no longer under the microscope, OPEC said next month we're not increasing. We're staying with our plan. This is what we see. And China locking down, OPEC's gonna be like, there's 20 million people locked down. I don't need to cut anymore. What are you, crazy? Because it's all profit for them. So I would say, I mean, I like how it's rallying right now. If we can get a pullback from 9:30 to 10:30, I think you guys got to go long. But again, remember, use the 35-in-1 method. Get in there and see where the basing is and look for price to hold.
That's at 10 a.m. Start looking at those 30-minute charts. And then drop down to your 5-minute charts going into the 10:30 announcement, and the announcement move to your 1-minute charts. But there's an opportunity there. 10:30 a.m. I dropped a link, so if you wanted to follow it. I'll drop another link in as well. So you can be watching. You could be watching what's going on going into that oil inventory number. Now, we've talked about, we obviously saw silver taking off. We've seen oil trading higher. We know we've got a weak dollar. Let's take a look at the US dollar CAD, and then we'll wrap things up by taking a look at what's going on in equities, because giving everyone a little time to digest the equities. But the dollar CAD is getting the double whammy.
Yeah, I mean, yesterday we talked about we were in a level of basing buying at 25.70, and we saw that basing. And if we had any pullback, I mentioned yesterday, listen, I see this coming back down to 125 tomorrow, whether it be oil or whether it be CPI if we have a disappointment. And we had the standard Harry Potter trade in here. Remember, we're always looking for areas of basing, and when we see it, and I'll pull this one back. This was a larger, it's something we've been talking about. But even on the near term, you can see that we had basing sitting right there. And again, guys, it's the standard Harry Potter. When you have basing and pulls away, the reason it didn't go down is because there was no sellers there left, and buyers were able to win that battle. It went up and grabbed where it should have, and then when it fought down and finally broke through that level, that old becomes new, and there was a little hiccup in there. So again, it's a red, green, red confirmation down using an old level. Now we're shooting for 125. I'll tell you right now, 125 is a big target, is a big psychological number, particularly for the dollar CAD. as we're seeing this CAD strength, continue. Right now, remember, CAD is taking an aggressive approach. I would say, again, it's a little bit late to get into it now, but there will be a reversal today because, again, the U.S. market tends not to like the weak dollar. They tend to like the strong dollar. So seeing kind of where this base is, there will be probably a bouncing point. And like I said, this is a big area here of buyers that we're kind of dealing with. So, as much as I like this one, I would say probably a little bit more conservative down here. Yeah, it's right around that target point. Let's bring this across. It's right around the target. So I would say 125 is really where I'd be looking for a bounce. It's trying to base right now again because the news is absorbed in. But I would like to see it come down. I'd like to get a little confirmation. So the same way we had this confirmation here, I'd like to see the confirmation come up top. And kind of reverse. And I think that's going to be across the board. As I said, technically this should be strong dollar on a purely just today, just CPI. This is a strong dollar tone.
There's so much more going on.
Yeah, it was the weakness yesterday. But, again, part of what we're seeing today also helps set us up for tomorrow morning because remember, tomorrow we have another big one as well.
We have the
PPI number, right? And this is the price of finished goods and services, and we all know this. And last time there was a huge miss to the top side, and they're actually expecting it to be lower. Everything came in higher. So if tomorrow's numbers are also a big miss, remember when it costs a producer more money to make something, or if they're absorbing more shipping costs, they pass it to us, right? So this matters. And like I said, it's you can't deny this. So, I mean, again, Powell taking that stance, and I'll tell you right now, with Eric Adams making the comments that he made, props to him because he's absolutely right. There are businesses and everything is shackling up, and I get why people are staying home. But again, he's really going out and becoming like a voice for, the common man and seeing if we're going to be spending twice as much and this is rising, you're going to have really a Democratic mayor and state start attacking the president. And basically, like, you're killing our country.
Right. They're going to have to do something about inflation.
Just action. Yeah, action. So tomorrow's another big opportunity.
March, June, SEP, and DEES is what Goldman was calling for. I would be very surprised if we didn't see something happen in March. And the question then to me really is what you've been saying is, and not just 25 basis. They might
do 50 on the first.
Do 50 on the first just to give it something to think about. They might not. That might be too aggressive. They might do 50 on the next. Who knows? But they're going to have to do something at some point. All right. Before we wrap it up today, let's just take a quick peek and run through. Let's look at the S&P and NASDAQ because the NASDAQ seems to be the one that's benefiting the most at the moment. S&P and then the Dow.
Yeah, I mean, VIX is down again. We're down 2.3%, or 2.39% in the VIX right now. We mentioned it yesterday. Every time that one of these large news events comes off, it'll drop, and it has. We had the big drop, then we had the Powell. Okay, that's it. We're not right. Okay, great. And we're seeing that kind of evaporate even more today. ES for the most part, it's continuing to rise. You can see that it keeps bouncing, and it spent a bunch of time at the 4,700. It came back down and used it, and then took off, and now we're at the 47.25 mark. We're in a racetrack on the left side. So if the market looks like this and say, hey, that's not as bad as what we thought, or it's great, but Powell's not going to do anything about it, we have the ability to get up to that 47.75, almost up to like the 47.80 time today. Really, up until we get to this level, we don't have a lot of sellers. So you can see, although there's a psychological level in there and there's an old level that we kind of had as a target, there's not a lot really holding us back today. I mean, in reality, it should drop. But right now, the response is, we knew it was going to be there. Everybody expected this data, and Powell said we're not doing anything. They have no timeline about when they want to raise. That is all positive. NQ absolutely is loving it. It's doing the same thing. You can see that we had that level there yesterday. It spent a lot of time basing. It came up, touched 15,900, came back down, used those buyers back down here at 15,800. Now we're going for 16,000. 16,000, big number. News will be all over that, and you can see we are also in kind of a racetrack. There's a little hiccup up here at 16,123, right up there. But you can see we got a lot of room.
16,000,
we got a lot of room to run. YM, same thing. We're bouncing off levels. We hit this one. We came back down, grabbed it again. I mean, again, this is all in the overnight. Look at this. Hit it. Used it.
Those charts all look very similar, by the way.
They're all the same. And then Russell's the same thing. Russell's coming up to a 50%. So I think, big thing is you can see that Apple continuing to grind up. Apple is also going to help it. There's not a lot of sellers in Apple. Tesla, kind of the same thing. We're in that level. But again, 1, 2, 3. This is hit number 4. this is where we break on the other side of it. We have this entire level. So Tesla also looks like it's a great, another way to propel NQ higher today. So wouldn't be surprised. And like I said, if you're looking at purely fundamentals, that number today should have ripped this, but it's the inaction of the Fed that is like, whatever. We expected this. We knew that it was going to be bigger. And again, we'll see what oil does today. Oil will also help this equation.
All right. So there we go. We went a little longer today, but I think we had more to discuss today. With that, any questions for Nadex, please email us, customerservice@nadex.com. Whether it's about our markets, the products, the platform, your account, anything, we're here to help. Can't help if you don't ask. Please email customer service. Brian is available, support at keeptradingsimple.com. If you'd like to hear something particular, you like what you're getting, you want to get a little bit more, any feedback on how we're doing on these morning market mover sessions, please email me, todd.rich@ig.com. I'm accessible as well. Brian and I would like to put ourselves out there, help everyone any way we can. Again, what we were talking about today, we've obviously that massive inflation spike. I think everyone was sort of expecting it. I think we actually might have been seeing some of the movement for that before the number came out, because I think everyone knew that. I mean, that's what might have been happening over the last week, is people anticipating this terrible number. Now that it's out, okay, there we go, and let's move on. But we do have that oil inventory report at 10:30 a.m. So be sure to be looking at that. And Brian and I will be back tomorrow morning. Remember, I gave you some links. You can certainly, just like there was a lot of action early today because of CPI, be aware we've got PPI tomorrow. Thanks for joining, everyone. I appreciate everyone coming. Hopefully you're getting a lot out of these sessions. Brian and I will be back tomorrow morning. Good luck in the markets.